All right, the clock strikes at 2 p.m. Central African time. The markets are in motion and Market View tracks them all. It's a good afternoon to you, and it's a pleasure to bring you the stories shaping business, trade and enterprise in Eswatini and beyond once again today. I'm your host, Sifiso Ngumala, and for the next 30 minutes, we will be diving into the latest market trends, the latest policy shifts, as well as the latest financial analysis, all with the clarity and insight you need to stay ahead. First up, big changes that are coming for startups under the Royal Science and Technology Parks Incubator Program. The RSTP will now hold a stake in incubated businesses, a move that could redefine how young enterprises grow as well as how they scale. We are going to unpack the details with their communications officer, Senzo Malaza. Secondly, infrastructure development takes center stage in Matsapa. The municipal council has set aside a staggering 32 million emalangeni to improve road networks. Now, with over 850 businesses operating in the area, will this investment be enough to boost business performance? We hear from Sihle Sihlongonyane, the Council's communications officer. And then on our Enterprise Watch segment, consultations on the Citizens Economic Empowerment Act regulations are officially underway. Now, the Ministry of Commerce is calling for greater business participation to shape policies that could transform economic opportunities for SMEs. Our business journalist, Nelson Langamandla, sat down with Dr. Thandiwe Hlachwago. She's the chairperson of the steering committee to break it all down. We will then, of course, wrap things up with our market analysis. Wall Street is making moves per usual. What are the latest figures and how will they impact global and local markets? Economist Sanelus Bia joins us live in studio for his expert insights. It's all coming up right here on Market View this afternoon. Let's get started. Science and Technology Park, which will now have a certain percentage stake in incubated businesses. The communications officer, Senzo Malaza, has shared all the full details of how this will be done. Currently, over 60 businesses under the Business Incubator Program have that relationship with the RSTP.
We are only holding 10% of the shareholding, so we're a minority shareholder. So the owner of the company remains with the 90%. If there's more than one investor, they'll definitely have an upper hand than the Royal Science and Technology Park. As I mentioned, we're not going for the whole 10% in all the companies. In some companies, we may have a 5% stake, but that definitely gives the other investors a bigger leg to stand on when it comes to the day-to-day running of that company. We strongly believe that such an arrangement is going to help us in as far as maybe coming up with a fund that we in future are going to use to support the startups if they need some financial injection and cannot get either investors or access loan facilities in banks. So that fund is going to help us, or rather help the startups a great deal when we eventually get to that.
In an effort to boost infrastructure, the Matsapa Municipal Council has set aside 32 million emalangeni to improve road infrastructure to boost business performance. The communications officer, Sihle Sihlongonyane, says Matsapa is home to over 850 businesses.
The town of Matsapa is currently working on a project of rehabilitating the Matalatala Street and King Mswati, the Dead Avenue, which are roads that have been in a bad condition for over some time. So this rehabilitation project will cost us around 32 million, which we saw is quite important in terms of trying to rehabilitate that road, because it's one of those roads that are in a busy intersection within the town of Matsapa. This project will be going on for a period of 8 months, beginning from February to August this year. The reason why it's going to take this long is because we're trying to ensure that we do not disturb the operations of businesses and properties that are within that area. So we'll try to ensure that there are alternative routes for them to ensure which they get to their desired destinations, and also just don't disrupt the business engagements that are going on within that area. And we just try to request to the community of Matsapa to ensure that they try to avoid those routes that will be rehabilitated within this period of time. Registered businesses operating within the town of Matsapa, and in our calculations we see that most of the businesses are located along the area that we're going to be rehabilitating that road. So it's very important for us to ensure that we continue to provide that essential service, as well as ensuring that the businesses within that area continue to function.
And that's it for our business news segment. We'll go for an ad break. We'll be back with our Enterprise Watch.
Eswatini TV has signed a code of conduct that is enforced by the Eswatini Communications Commission. We are committed to reporting news that is accurate, comment that is fair, and programming that does not amount to hate speech or the description of gratuitous violence or explicit sex. For any complaints of our programming, please contact us on 2411-9600 or email info@eswatinitv.co.za. You can also contact the Eswatini Communications Commission on 2406-7000 or write a letter to ECCOM on PO Box 7811 Mbabane. Email address is info@ecom.org.sz.
Welcome back. In a call for greater business participation and transparency, the Ministry of Commerce, Industry and Trade is urging all businesses in the country to make their submissions regarding the upcoming regulations that will shape the operationalization of the Citizens Economic Empowerment Act. Now, with a focus on promoting inclusive growth, the Act will play a vital role in ensuring that the economic opportunities within the country do indeed benefit all citizens, especially small and medium enterprises. Business journalist Nelson Ndlangamandla sits down with Dr. Thandiwe Hlachwago. She's the chairperson of the steering committee responsible for the formulation of the regulations, who shares how this process will be done and how businesses can participate.
Dr. Thandiwe, welcome to Market View. I've heard really good news. I think this will come as exciting news, especially for the business community. I heard that consultations for making the regulations of the Citizens Economic Empowerment Act are about to start, or they have already started. But can you tell us more about this?
As the chairperson of the steering committee that has been duly appointed to conduct the drafting of the regulations that will be used for the implementation of the Citizen Economic Empowerment Act 2023, we are happy to announce as a council that we have started the process of stakeholder engagement. We will be doing stakeholder consultations with the entire citizenry of the country to make sure that we get their views and opinions on how the regulations should be drafted. Their input is very important for this exercise.
I know that you deal mainly with businesses, but can you articulate all the sectors that will be allowed to participate in making these regulations or making these submissions?
We are happy to share that we have identified 13 groups of which will represent the various stakeholders. We have identified through our exhaustive and comprehensive stakeholder mapping. The stakeholders that we have identified is the business climate, which will attend on the 17th of March, and then we have the business support organizations lined up for the 17th of March as well, and arts, crafts and creative industry, 18th of March. Agriculture industry actors, 18th of March as well. And then we have the construction and infrastructure industry lined up for the 19th, the morning session. And in the afternoon, same day, we have education and labor industry. On the 20th, we have the health industry actors. This group will attend the morning session lined up for 9:30. And then we have energy, that includes your fuel and gas industry, lined up for the 20th in the afternoon. And group 9 is ICT industry, lined up for Friday, the 21st of March. And group 10, manufacturing, trade, procurement services, lined up for the 24th of March, which is a Monday. They will be taking the morning session. And group 11, mining industry, Monday the 24th in the afternoon. Group 12, retailers, vendors, and wholesalers industry, lined up for Tuesday the 25th in the morning. Group 13, we have tourism and hospitality, same day, the Tuesday, 25th March, in the afternoon session. Those are the 13 groups that we expect will be participating on the consultative processes, which will be held at the UN House in Durban.
There might be people who don't really understand what the Citizens Economic Empowerment Act is all about. Although a lot has been said about it, I think the Minister of Commerce, when he speaks about this act, you can tell that he knows that it will transform the business landscape. But can you briefly tell us what this act is about?
The Citizen Economic Empowerment Act is a piece of legislation that was enacted through an act of parliament. It was endorsed in 2023. It was established to ensure that our citizen locally owned entities are catered for and they are empowered. And it was also enacted to ensure that we have certain sectors that are reserved solely for Eswatini. And now it is that time where we are drafting the regulations for the implementation of this very act, because the statute alone, the act of parliament, cannot be used for the implementation. We need to break down the act into various components using the regulations, which will be used for the implementation.
Why is it important for small and medium enterprises to make sure that they attend these consultations?
Okay, the benefit of SMEs and MSMEs in the Act cannot be overemphasized. It is very, very critical that they do participate because they are the cornerstone, they are the heart of the economy. We want them to contribute to the economy, and we want them as well to be the beneficiaries of the Act, because we realize that there is a big gap. We have services in the country which could be solely reserved for Eswatini and be allocated to SMMEs, but some of those services are being done by foreigners. So it is important that whatever that can be done by Eswatini be given to Eswatini. That is what we are trying to foster.
Will those businesses that are in the outskirts be able to make their contributions? Kunanang somabhizinisi lo le emakhaya yini le ndawo yenda kuqinisekisa ukuthi naye uyakhona kufaka la kulama regulations kwekuthi ufisa ukuthi lo mthetho usebende kanjani nekuthi yena azuze kanjani kuwo.
To accommodate Eswatini who will not be able to travel to Mbabane due to various reasons, we have made arrangements to do regional tours wherein the SMMEs and citizen-owned representative companies will be attending, and we will be taking their submissions for the drafting of the regulations. We do not want anyone to be left out in this exercise.
I am always interested in timelines, Dr. So when you start this process now, when can we expect these regulations to be in full motion?
With the consultation process starting on the 17th, I think we are on our way, and we are coming up with a means of drafting the document which will be used for the implementation. Everything is dependent on the availability of funds as well and cooperation from the various stakeholders. So for the smooth exercise, we need their cooperation and we need their implementation. So the sooner they participate and we have a seamless and flawless consultative exercise, it will make it easier for us to come up with a proper and comprehensive document for the implementation. So as soon as we are done with the consultative exercise, we will then follow all the stages that we need to adhere to using the Attorney General's office to get the regulations endorsed and through the assistance of the Minister's office as well. And I am happy to share that we are getting support from the UNDP. I think it is important that I highlight that the drafting exercise is funded by UNDP, and we are looking forward to more assistance from their office as we embark on this journey.
It's been a pleasure having you, Chairperson, on the show and looking at all the responses that you've given us today. I believe that the committee is in good hands, and we can't wait to see what submissions you will come up with. We can't wait to see these regulations being implemented, because small and medium enterprises, the business community is so excited about the Citizens Economic Empowerment Act. Nendvuna ilitiko letemabhizinisi umhlonishwa Mancoba Khumalo nakakhuluma ngayo uyeva lokwekuthi cha itawushintsha vele lokusebenta kwetemabhizinisi la eveni baningi emaswati lakatawuzuza. Siyabonga kakhulu kuba nathi elihlelweni.
Right, that was Nelson Langamandla, a very compelling and competent business journalist in conversation with Dr. Thandiwe on the Citizens Economic Empowerment Act regulations, which have already begun. Can't wait to really feel the effects of this act as they promise to really uplift our local businesses, especially our SMEs. Let's go for a break. Senator Spear is in studio. We want to react to what is really happening in Wall Street. We are seeing woes there, some mixed reactions in Europe and Asia. He's going to chime in after the break.
Eswatini TV has signed a code of conduct that is enforced by the Eswatini Communications Commission. We are committed to reporting news that is accurate, comment that is fair, and programming that does not amount to hate speech or the description of gratuitous violence or explicit sex. For any complaints of our programming, please contact us on 2411-9600 or email info@eswatinitv.co.za. You can also contact the Eswatini Communications Commission on 2406-7000 or write a letter to ECCOM on PO Box 7811 Mbabane. Email address is info@ecom.org.sz.
All right, welcome back to the program. You're still watching Market View. This is the Tuesday edition. We get into our last segment, market analysis. We want to react to the numbers of the day. We are seeing some woes in Wall Street, mixed European markets, as well as some diverging parts there in Asia. Sanele, welcome to the program. Let's start in Wall Street. We're seeing FTSE down, DAX up. This is the European markets. Let's start in Wall Street. Everything is down here. Everything is in the red. What is happening?
So, Mr. Ngumalo, when we talk of Wall Street, we're talking Trump, and right now the markets are really just responding to what President Trump does and what he's going to do, and we know that he's somewhat of a wrecking ball. Today it's that, and then tomorrow it's that. So that's what markets are worried about, the fact that there's still no clearer policy direction. So you wake up today, you have tariffs, and then tomorrow they are paused.
Right,
right. And, there's also fears that these tariffs that President Trump wants to go after are actually going to hurt the American markets, in terms of the inflation, in terms of, those supply chain kind of, dynamics within the, that's within that production process. So what the markets are fearing is the fact that these tariffs are actually going to they're not going to end well for the US, even though President Trump means for them to end well. But when you do the numbers and you do arithmetic, it's just not adding up. So what this has then culminated into, Mr. Nxumalo, is those inflation fears coming back into Wall Street. So we know when inflation goes up, the interest rate is going to go up again. So then that means businesses are not going to have enough capital, to deal with their daily operations and expansion effects. And, analysts are also predicting that if we continue on this footing, if President Trump continues on this footing, we might likely be heading towards a recession within the U.S. market. And once that market goes into recession, quite a number of markets are going to take a hit because the U.S. is the consumer of choice for quite a number of the companies that are trading, and also for quite a number of export destinations for quite a number of countries.
But I'm sure they want to avoid a recession by all means necessary. What is expected of the presidency with regards to that?
What do we expect him to do? Something, it's been over 100 days. So within the first 100 days, an incoming president should have a clear policy direction. So right now, that is what markets are lacking. There isn't a clear policy direction. And everything that he tries to do ends up backfiring. That's why you see this back and forth, back and forth. When it started, we thought it was the art of the deal, trying to get as much concessions from the other countries. But right now, it's getting clearer that I don't think it was a well thought out plan in terms of its likely impact. So what markets need is clearer direction, predictable markets. Right now, the markets are not predictable. We don't know what the inflation trajectory is going to be. We don't know what the interest rate trajectory is going to be, because there's a lot of moving elements within the fiscal space that's within the presidency.
German and French markets clearly holding steady. What is this resilience warranted on? Because we are seeing the U.S. struggle, but somehow Europe is doing quite well.
Yeah, so what we're seeing within Europe is that surge in defense spending. You know what's happening with Russia, Ukraine, and Europe feeling left out, and with President Trump calling for more NATO countries relatively to invest within in their defense. So what we're seeing pull up those numbers in Frankfurt and in Paris is largely due to those defense stocks that are on the upsurge, right? So that's what's pulling those numbers up within the Eurozone. But the inflation fears and those recession fears are quite audible and quite visible within London, purely because London is not part of the EU, so they do not get those conglomeration effects, and in as much as London is also going to ramp up that spending, but they came in too early into the fray, so we saw that reaction in London, and actually it did move the London markets. Also, what we noticed within Frankfurt is the fact that we will have a new government coming into place, and it seems that those preparations and those moves are actually going to be more expedited than we would have thought. So we should have a a coalition by end of week, which is unprecedented, and that coalition seems to want to work towards the economy, and we've seen that there's already been talks and movements towards increasing that spending within the German economy, floating new bonds, which is something that was unheard of. So we've seen that they've played around with their deficit financing ceiling. So those are the movements that are kind of shaping Germany and France right now.
It's quite interesting because I want us to move into the Asian markets, and we are seeing diverging paths here. Clearly, China's market showing some resilience, but Japan is seeing some declines amid these global uncertainty. What is happening here?
Yeah, so in Japan and also within Hong Kong, there are those fears that, the U.S. economy is going into a recession and there is no clearer policy path coming from the U.S. But what we're seeing also happening in Japan is, there isn't a clear stance in terms of what the Bank of Japan is going to do within that interest rate upwards cycle, right? We don't know. Japan had not seen that in a very long time. They were on a negative territory for over the past 2 decades. So right now, interest rates are going in the positive, so that means there's no longer free money in Japan, and And what the Bank of Japan needs to do is balance that up with growth within that region, right? And when you come into China, we do know in the mainland that they do again target a 5% growth, growth in GDP. However, there is a bit of wariness within markets in whether China is actually going to hit that target or not. But the expectation is there's going to be quite a number of stimulus packages that are going to go into the markets. That's why we're seeing the mainland, just edging up, regardless of the fact that we know they are the number one target for those Trump tariffs.
South Africa and Eswatini markets, start with the JSE All Share Index. It is up 0.36%. ESE All Share Index holding steady. Local markets remain stable. I think that is the clear conclusion here. What are they reflecting?
So within the JSE, what we are reflecting on right now is you can see there's a marginal rebound. So markets are basically showing that fear of what the Trump presidency is doing. And also, you will remember, Mr. Ngumalo, that last year we had elections in South Africa. And for the first time, the ANC got less than the 50% mark, which they needed to form a majority within parliament. So right now, what we're waiting to see is, yes, there has been a budget that's been tabled, finally, and that's contributing to that rebound. But what markets are adopting right now is kind of a wait-and-see approach in terms of what is really going to happen. How is this GNU going to shape up policy and how that is going to affect growth? And another thing that we've seen, just coming out of Jozi just a couple of hours ago is the fact that JP Morgan Stanley has actually downgraded their rating of the JSE stocks, the JSE markets in terms of equities. So that means, earlier on we were coming in at a bullish stance, and now we've seen some kind of a bear type of market, and that's why they've been downgraded from to that neutral stance. And then in the domestic economy, again, we're seeing those, stay stagnant, that stagnancy, purely because we know that our market is so overly invested by the financial institutions because of that 30% low. So those are usually very hard to move. There's a regulation in Eswatini that says you should keep 30% of the more of the funds we've mobilized domestically within the domestic market. So that tends to over-finance and, trying to deal with the excess liquidity within our banks.
But to me, it sounds or it seems as though there's a prevailing optimism, sense of optimism in South Africa and here at home in Eswatini, just by looking at the figures, really.
Yeah.
Do we have anything really that should invite the inverse of optimism, really?
Yeah, domestically, the fact that, most of the companies, if not all of them, that have been listed on the stock markets have always turned a profit. So what we've seen on the domestic front is the fact that we have dividend investors rather than, those, we call them frackers, those that are looking for highs and lows of the markets to buy and sell and come out. So what we have domestically is rather in dividend investors, people who are just going to collect dividends, they're putting it there. So it does reflect a bit of stability, because if the investors saw a bit of instability coming, they would sell and the markets would crash. But the fact that our markets have not crashed in quite a long time, that's quite good. And in coming into South Africa, the issue of uncertainty also edges gold up and other precious minerals. And we know South Africa is a resource-based type of economy. So when those go up, when those tick up, then South African Stock Exchange is actually somehow buoyed up, because we do have the likes of BHP, Barriers, and quite a number of those miners there.
And rightfully so. Gold is indeed edging up. We are seeing it is up. Oil prices are also climbing. What is this really telling us in terms of investor sentiments towards safe havens and commodities, as it were? But also, I also just want you to give us a quick summary on currencies today.
All right, sure. So what's happening with gold, again, goes back to that Trump uncertainty, because markets are quite not clear what's going to happen. And we've seen the dollar weakening against inflation fears. So that's why we're seeing gold trying to climb back up again because there's that uncertainty in markets. And as you rightly said it, markets are shifting towards safe havens. And then those recession fears are quite visible in the price of Brent crude because we do anticipate that if the US goes into a recession, demand is actually going to take a dip. So that's why the price of Brent crude is playing around the 69.70 type of region. And then in terms of currencies, you can, if you look at the markets, the domestic currency is relatively stronger against the dollar because of the uncertainty within the US, and with inflation numbers coming out this week, while markets are really not certain, and they do fear that inflation is actually going to go up since the Trump presidency. And then when you look against the euro, we've lost a bit of ground because there is a bit of stability in Europe, and Europe wants to invest in their defense spending, and we've seen that investment within Germany, that bond. And then against the Japanese yen, again, we've gained some ground purely because there are those issues with the Bank of Japan in terms of how they're going to strengthen the currency.
Always a pleasure hosting you on the program. That was the Saneless Beer with his punchy, engaging, and compelling insights on the market of the day. Have yourself a good and blessed afternoon. We'll see you again tomorrow in our Business Watch program. Bye-bye.